So welcome to our CEIBS webinar on digital currencies. So we'll be talking about digital currencies and cryptocurrencies today. I think some of you may be surprised to see me as the moderator because you must have been expecting Robert. Unfortunately, he's not feeling particularly well today. So I will be stepping into his large shoes. So I have large shoes to fill, and I will moderate today's discussion. My name is Viktar. I am a finance professor at CEIBS. I do research on political economy of finance, corporate governance, and consumer research. And I also am in charge of all things digital now that I had the digital age management research at CEIBS. So I will introduce our guests in a moment, but to keep our discussion a little bit livelier. So we will take a very quick initial poll just to understand where our participants are in terms of their knowledge about digital currencies and in particular central bank digital currencies. All right, so we do have quite a few people who know something about central bank digital currencies. So I think we will have a thoughtful discussion as we move on. I will introduce our panelists today. We have Patrick Heusser and Ran E. So Patrick is head of trading at Crypto Broker. Prior to doing that, he was an interest rates trader at UBS. And held in a variety of positions in interest rate, commodity, and currency trading in London, Singapore, New York, and Zurich, where he is currently located. So he's an expert in trading and risk management and has experience in startup projects. He has a degree in banking and is an expert in technical chart analysis. Our second panelist is Ran E, who is a CEIBS alum. It's always great to have. It's great to have Patrick here as well. But, it's always great to have him. So Ran is the Chief Operating Officer at Kronos Research and Wootrade. He has 14 years of experience in global asset management. He has seeded quantitative funds since 2014. He likes working with talented individuals and building long-term partnerships. He started at Freddie Mac and Strategic Investment Group. He has a bachelor's degree from Carnegie Mellon and is an MBA alumnus from 2014. Okay, so let's give a shout out to our panelists today. They will be sharing their experience with us, and I do hope that we will have a lively discussion. A few points of order, as Hannah, our coordinator, has told me. If you do ask a question, please use the Q&A function of the Zoom and not the chat function. And back to Patrick and Ran, I would like to keep our discussion as non-technical as possible. So let's try to avoid using jargon to make sure that everybody can benefit from what we're discussing today. First, delineate what cryptocurrencies and digital currencies are, because I think there's a lot of confusion, at least in the general public, between what currency is, what money is, what cryptocurrency, and what digital currency is. So maybe Patrick can start that point of order, and then we will take it from there.
It's actually quite funny. We have this this discussion or this intro we need to do quite often with clients because they seem to not know or see the difference between CBDCs, you call them digital currencies, or cryptocurrencies. And I think one of the biggest differences is that a CBDC is always backed by a state. It's a national currency behind, and it's usually fully backed by physical money or digital state money somewhere else on a different ledger, where the cryptocurrencies, and you have also different let's call it token models behind, but There's no state behind. There's no border. It's completely decentralized, and the value being given to each of these cryptocurrencies is pretty much given by the market, so supply and demand.
I mean, currencies generally are, conventions, right? They gain legitimacy from, people using them in their, transactions. Most currency is digital in some form, and most money is not created by the government anyway. Most money is created by banks, so it is decentralized. And so, what do you think? The boundaries seem to be blurry. What do you think are the biggest challenges, to crypto? And its ability to differentiate itself from digital currencies. Currencies are digital and decentralized, regardless of whether they're backed by the state or they are created through some decentralized network of operators.
Yeah, fair point. I think the biggest hurdles, or the biggest hurdle, is regulation. On the cryptocurrency side, most of these projects and tokens have no oversight of any kind of state regulation, or they don't obey to any certain laws or guidelines like AML and KYC, where the CBDC stuff, your digital currencies, they are obviously highly regulated, and for consumers, they have certain attributes that makes them safe to use, or should make them safe to use. Where on the cryptocurrency side, it's basically you need to do your own due diligence if you really want to switch some of your assets into that currency, because you have never certainty that everything goes by the law.
What do you, Rand, think about it?
Yeah, I think like Patrick said, one of the main differences is the sort of the credit or the regulations behind central banks. Well, central bank digital currency, I feel like it's more of another form of fiat, except it's governed by each sovereign entity, and it exists on a blockchain, most likely a private blockchain, and that's why it's kind of a digital currency. You can track perhaps each transaction on that blockchain, whereas cryptocurrencies, I would say cryptocurrencies are not really currencies. I think that term is misleading. I would categorize them mostly as like digital commodities, right? I mean, Bitcoin has often been called digital gold. It's super volatile. I mean, most cryptocurrencies, aside from what we call stablecoins, are very volatile. So there's no way that people can really use them as currencies per se. I mean, similar to gold. Gold is in some regards a currency, right? It's held by central banks. It used to be used for payments and such. Now it's just storage of value. And I would say digital currencies are the same, and it's being regulated and treated as such. By us, we treat it like just a trading like gold or any other commodity, and it's not stable. I don't think there's. I mean, most of the utility for it is not. It's not similar. It's not the same as a currency, I would say.
What is the difference between fiat currency and central bank digital currency? If you were to explain it to a lay person,
I see the main difference as that the CBDCs are programmable, so they have an additional layer of or attributes you can add to the normal fiat currency we have right now. Meaning, as an example, if you have negative interest rates in your country, if you take your fiat cash out of the bank and put it in a vault at home, you're not getting touched by the negative interest rates. If that country only has CBDCs, you would get charged, even though the CBDC is like fiat, but the system would be able to charge you the negative interest rates, even if you have it in your mobile wallet or in another kind of ledger.
Okay, so programmable. So that's the first difference. I think it's a very good. So what else? Any other important differences that you think?
I think the main thing is that there will be a blockchain behind it. So it's easier to track all the transactions. It's not like physical cash where it's difficult to track, but every single transaction in a central bank digital currency can be tracked by that chain.
Many central banks who are very active in digital currency project, they have shunned the entire blockchain technology because they think it's a little too slow. And some of them actually are working on I have a student, a PhD student of mine, who is actually working on a design that would, not even rely on the internet. They should exist in a digital form, but also, fiat currency today also exists in the digital form. Let me ask you a different question. So in terms of currency creation, most of it, so it's created by the state, and then money is created by banks. So basically, individuals do not typically hold accounts with the central bank. So I actually think that this also is an important differentiating factor, because with CBDC, individuals can potentially hold accounts with their countries or other countries' central banks. What do you think that will do to the market?
But I think it's about the design of the CBDC. It's not a given that every CBDC is designed that the citizen has an account with the central bank. So there are CBDC concepts where you go over commercial banks.
Exactly. So what do you think? I mean, I'm just trying to introduce some tension in our discussion, because we don't want to agree on everything.
Yeah, sure.
I will give you an argument which may or may not be correct, but I would like us to ponder it. I will give you an argument that and all CBDCs will be ultimately held by individuals with their or some other central banks. And the argument I have is simple financial competition. Let's assume that a country like the United States decides to issue a CBDC. Now, if that is transferable across individuals, it's very hard to imagine a situation in which a country like Switzerland can keep issuing its own currency, CBDC, which is going to be digital, through banks. Simply because Swiss individuals will find it easy to replace Swiss francs with freely moving dollars or yuans or some other highly liquid global digital currency. I mean, I'm not sure that will happen, but it's quite possible, I think. So what do you think about this prospect, and whether it will put pressure on central banks and how they design their own currencies?
I have a very strong feeling on that side, because I have similar discussions with hardcore Bitcoin guys. They say Bitcoin is then the only one, and you should actually have everything in Bitcoin and measure everything in Bitcoin. And I just can't do that. And I think 99% of all the citizens, they still measure everything in their national currency. So even if the dollar, the US has a very cool CBDC, which flows around seamlessly and it's cheap and quick and efficient, I don't want to do the conversion all the time and think in dollars, because everything is in Swiss francs over here. So I think you sort of leave the people behind, and they don't want to do that, or they're not ready yet to switch to a global currency and think in different prices. So I think the national currencies will stay. Fiat or CBDC doesn't matter, but the global trade currency, and I think there is a war at some point. Will it change? Will the dollar be replaced by another global trade currency? And there, I think your argument is very strong, that if whatever state is able to produce a very efficient CBDC, which can be used for global trade, that currency has a shot at it.
And so we have a question from the audience, from Davide, who says, actually he asks two questions, and I think maybe Ran would be best positioned to answer the first, and Patrick the second. It seems that crypto is just something with which investors play with, David says. Why, as a consumer, should we care about crypto since it is so volatile? And I think that's a question for Anne. Question for Patrick is, CBDCs instead seem to be a logical evolution of the fiat currency, skipping the cash phase. No cash at all with subsequent savings from the government. Is it just an evolution, or would you define it as a proper revolution also for consumers? If yes, why?
I'm not going to go into like the mechanics of, say, Bitcoin and try to sell the asset. But if we just look at history, how history has evolved, and how Bitcoin adoption, price, and even newer ones like Ethereum, from its price, from adoption, from institutional infrastructure that's built around the asset. I think the story is that it's not just sort of something that people play with. It's becoming a mainstream asset class. So I can see in 3 years' time or less, every institutional investor around the world, or most, have a piece of crypto in whichever form, in its native form or through a derivatives product like an ETF or futures or grayscale trust, whatnot. So that's what it's evolving into. And I think it's mostly treated like an asset class. And there are a variety of investment vehicles or trading vehicles that's revolved around that, and the different types of services. For custodian, Fidelity has entered the game, so has a bunch of the investment banks for trading as well, OTC services. CME has Bitcoin ETH futures, the Chicago Mercantile Exchange. I think sooner or later an ETF will come out. So these are not the average everyday, and a lot of the VCs and hedge funds are the first ones in, like Andreessen Horowitz and etc. So just from the people that are coming in, and lately more the Mark Cubans, the Peter Thiels and such, and obviously Michael Saylor, these type of guys. So Elon Musk. So then from these guys, I think it's worth investigating into why they're all coming into this market, right? And the story has been to put a small piece of your asset into Bitcoin. And it's not necessarily to speculate on it, but just as like a diversification. So I think I'll stop there and just tell sort of what happened instead of try to sell the product.
So Patrick, do you think CBDCs are a proper revolution, as Marco, as David asks it? Yeah. If yes, why, and what are they going to do for the market?
I would like to put it in two phases. The first phase we see now, having these projects about CBDCs is, to me, just an evolution. It's the money, and you said it as well, our national currency is mostly digital already. You pay by credit card and other with your phone. And now the CBDC part would have come probably anyway somehow, but the whole crypto economic, the crypto currency universe sort of pushed it a little further, and maybe Libra or Diem was then the initiator to make sure that the central banks are going faster. So the first phase, just the CBDCs we have right now, or the projects we have right now, is an evolution. The revolution for me is coming if you put tokenization or real world assets and you digitize them and you settle them with a digital currency. Because when you talk to these visionaries, they say, we put everything on the blockchain and we have stocks and fraction of houses on the blockchain. This is all good and nice, but if you only have one side that can settle immediately on a public ledger and is fast, and the other side is still the fiat route, there is no efficiency whatsoever. So the revolution for me is coming in when CBDCs are handleable like stable coins we have right now in the DeFi ecosystem. So when I can start to basically sell my equities, which are tokenized, and get my CBDC money right back, so it's like in an instant, you can call it a chain swap or whatever, and you cut out the middlemans, which is something that cryptocurrency universe is doing already, right? You have everything on the blockchain in a project. You don't need any brokers. You don't need any banks. It's all without middlemans, and I think there is the revolution. And I'm quite curious to see how the banks are coping with it, because they will lose some market share over the next few years.
So basically, if I understand your point correctly, it's that bringing CBDCs will simply bring cryptocurrencies, in some sense closer. Crypto, maybe not cryptocurrencies, but blockchain technology and everything that's on the blockchain, more interchangeable with the real assets, right? Closer to the real world. Is that a fair assessment of what you said?
That is one part, and the second part is, for me, it's still, we're far away from mass adoption. I mean, we're getting there slowly but surely, but the down to the ground citizen is still afraid of moving some of his money into a cryptocurrency asset. But if you have CBDCs, so my daughter, for example, she's 11 years old, she will never see a bank counter in her life, because she will bank on her phone. And if the CBDCs are on your phone, and you're getting used to the technology, how to move around your money, it's only a small step then to maybe buy some ETH or buy some Bitcoin with your phone. So for the generation like us, it's quite difficult now to make that jump. But for younger generations, that will be just like normal.
Now, the last thing that I wanted to touch upon before we move on to some details of crypto is banking, and it also probably will touch upon the revolution. So banks now create credit, and they create credit, and with alongside creating credit, they create money. Now with CBDC, the money creation might be entirely done by the central banks, right? So they would not need banks to create money at all, because what is money? Money is not currency. Money is bank accounts, deposits that we use to pay for things. Now, if you have deposits with the central banks rather than commercial banks, then there would be the credit and money creation channel would be potentially entirely broken. So is that a revolutionary approach to banking? What do you think that is going to do?
I can see some of that in just the pure crypto industry right now, even though there aren't any CBDCs currently. But in terms of stablecoins, there are issuers that issue their own stablecoin, right? And then you kind of have no idea what the balance sheet looks like behind the scenes. So the assumption is that there is some credit being created, and then the exchanges act like the banks of traditional finance, where they can create credit on top of the assets they get from the central bank, which is one of them could be Tether. It's not necessarily one entity, but so I mean there is a lot of that going on, and leverage. This type of leverage via credit created by the it's like a fractional banking system in the exchange world, and that type of it is pretty risky currently in crypto, and there's leverage in other places as well. So yeah, that's something that we observe just in the crypto native world.
I will come back to my point I made at the beginning, where I said there are different designs of CBDCs. Viktar, you implied now that you use the design where the central bank is basically running the citizens' accounts, and you kind of leave the commercial banks out. And I think Bank of England did a study on this, and the SNB also did a study on this, and they both do not really like that concept or that design because it might trigger a bank run, because banks will lose quite a lot of deposits, because why should I leave my money at the commercial bank when I know I can leave it at the most stable institute in my country, at the central bank? So most of these CBDC designs are like the ones we have with the commercial bank generating the money. And it's a hybrid, it's a CBDC hybrid where the commercial bank goes and mints the coins with the central bank and then basically produces it for the citizen. So to me, but that's my personal opinion. I think there is only one way to do it. We use the same fractional reserve system we have right now with central bank and commercial banks, and the CBDC should be designed the same way as we run it right now.
I see. I mean, these are all things which we will be learning over the next decade or so in real time. So, but it's a great points to ponder. So we have spent almost half of our time on CBDCs. So I think. Since we're not supposed to answer all of the issues that might come up, why don't we turn over to cryptos? And I think so. The question I'm going to ask is going to be a little broader, and also Dante is asking a related question. So we're going to address them together. I now am in China, in beautiful Shanghai, and as I have noticed, and as many people know, China is virtually cashless, right? So China is cashless. Maybe Ryan can tell us a little bit more about the digital finance industry in China, because China is probably closest to having a digital currency, not necessarily CBDC, but issued by private companies such as Alipay and Financial and Tencent in terms of WeChat money. And also, what about cryptocurrencies? So as Dante is saying, Bitcoin has been adopted as legal tender in El Salvador. So do you think more countries are going to follow suit? And what will it mean for the currencies such as the euro, the dollar, and the RMB?
China is a great place to issue central bank digital, which they did, right? Yeah, because with Alipay and WeChat, people barely, I don't think people generally don't see cash these days. I mean, the average consumer in the city, and they're using things like Alipay and WeChat Pay, so everything's digital anyways. So it would be like a habitual thing to use another thing that's digital, that's trusted by the people and sanctioned by the government. So it's a very natural flow. China is not friendly on cryptocurrencies trading in general, or just crypto or Bitcoin in general. So I don't think there's going to be adoption in China anytime soon. Well, in every country, the attitude is different. US is more like exploratory and regular. They tend to regulate the industry, and sort of the red lines are around securities, futures trading, and there's different regulatory bodies that are regulating different things. And then so every country is different. Korea, Japan, parts of Europe. So it's tough to have an overall feel, but I think the general sense is that cryptocurrencies as an asset is getting regulated in each jurisdiction, and the countries are trying to protect their users against getting harmed by unregulated products, and protecting things like obviously like money laundering and such, which is the right thing to do. So I think eventually every country probably just has their own rules regarding cryptocurrencies.
But don't you think that, I actually like this point, and I think there are two important points. One is that some countries have fairly strong institutional systems. China, the United States, Japan, the European Union, and they are, genuinely, they have a vested interest in maintaining the dominance of these fiat currencies. But then, if I know that in Venezuela during the economic hardship, Bitcoin actually was probably even more stable than the local currency. So there may be underdeveloped countries which, first of all, do not have the institutional strength to regulate Bitcoin or other cryptocurrencies particularly well, and whose netizens would actually prefer these cryptocurrencies, even though they are volatile. So don't you think those countries, could be in line for adopting them as a legal tender, like El Salvador did?
Yeah, I think that's exactly right. The larger countries are, more concerned about their own position, and the smaller countries, it's like an opportunity. And there's a lot of wealth in crypto currently. So then the countries that are more open and more accepting, the industry tends to flock there, right? That's kind of happened with, I think, Malta at one instance, Japan at one instance, and then they've regulated it a bit more. El Salvador, obviously now, I think Singapore is a place that's quite open. Yeah, so I think you're absolutely right.
Patrick, what do you think about that?
I see quite a few hurdles or issues if you want to have further countries adopting Bitcoin as their legal tender. I mean, I see it as a good progress, and it gives Bitcoin a bit more credibility, what it already has. But if you look at what a legal tender currency would need to fulfill in international trade, El Salvador is just on an island now alone with Bitcoin. I mean, the US doesn't trade with them Bitcoin or goods for Bitcoin, nor does the European Union or China. So I think it comes back to that what Ran was saying at the beginning. It's not really a currency. So now they adopt it as legal tender, which is by definition then a currency, but I don't believe it's a currency. It's a store of value. Yes, they have issues with their own fiat currency or being pegged to another currency they cannot control. But I don't think it will solve them all the problems they have. But it's pushing international discussions about, so what happens if a few countries in Africa will adopt Bitcoin as well as legal tender? We might need to adopt ourselves too and make and do payments in Bitcoin versus goods. So that's a good thing, but yeah.
So I also wanted to ask this question because we're talking about Bitcoin, but Bitcoin is far from, it's the largest, but far from being the only cryptocurrency. So maybe you guys can give us like a 2-3 minute overview of the state of crypto today. I stopped tracking, but before we do that, why don't we have our second poll and see how many of our participants have invested in crypto. I am actually curious to know. All right, actually, a substantial number of people, 44% of the ones who voted, do have some assets in cryptocurrencies. Presumably, they're making money, like tons of cash, which will then become CBDCs at some point. And a very large number of people are thinking about it. So I think it's an interesting thing to discuss. So what are the options for people who want to invest in crypto? Bitcoin is one. Are there better, worse options? What do you guys think about it? Let's maybe start with Ran, since he's dealing with this on a daily basis.
I think it depends on the risk appetite of people. I would generally just stick to Bitcoin if you're very new to the industry, right? And just allocate a very small part of your assets. Yeah. And maybe Ethereum, right? So just the two largest ones, and allocate something like 1% or up to 5% of assets. and just be conservative. It's extremely volatile. Yeah, and try to understand first. I wouldn't suggest other coins.
So in your view, basically, other than Ethereum, no other currency can compete with Bitcoin. Now, Ethereum.
I wouldn't even say they're competition, to be honest. It's a different type of an asset. I think in crypto, there's things that are stable that resemble fiat currencies like stablecoins. There's things that resemble commodities but can't do anything with them, like gold. Bitcoin, you can't really do anything except to leave it in the wallet. Ethereum, you can actually use, and there's all types of applications built on top of the Ethereum networks. Other coins have different functions, but I think, like, just from a pure risk perspective, I would just stick with those two. And then if you really if you're not risk averse, then you can venture into some of the other ones, but really do your homework and do your research.
And what about other business applications? How do firms, like real firms, use cryptocurrencies, or I think if we can stick with cryptocurrencies more generally, and what are the benefits from the real business operational point of view, not from an investment point of view? And this is a question for both of you, for both Patrick and Ran.
Well, on our end, it's we have only started now to reach out to corporates that have international presence and payments and dealings. So the stablecoin environment, or the stablecoin selection we have in the cryptocurrency ecosystem is quite an efficient and cheap way if such a company starts to think about moving their cash around without using the banks. Swift payments are taking quite a bit of time. They're expensive. Sometimes the money gets stuck somewhere because another correspondent bank doesn't move it. Weekends, you can't move anything. So from a regulated point of view, or us as a regulated company working with other regulated clients or corporates, the only non-investment use case is actually have a more efficient use of your cash and move it quicker around.
So basically, quicker settlement, right? More liquidity, you can do it 24/7, 365 or 366 days. Is that the point?
It's half the truth. Yes, you have 24/7 possibility to move it around, but you always need those bridges where it goes into the real world. And if there are some bridges, they are 24/7, but some bridges, they work from Monday to Friday and then they're closed on the weekends. And it's, again, your business partners, they might need to do the step as well. And they say, well, I'm happy you can send me USTCs and we settle the trade, instead of you send me dollars via the Swift banking payment system.
Moving money around, but there is this additional volatility, right? Maybe it's worthwhile waiting a couple of days.
But not in stable coins, right? The USDC is $1, $1 is $1. Ran can chip in as well, but you have the fully backed stable coins like USDC, where you need to pay into a regulated entity dollars, and then you get minted USDCs, and then you can move it around in the system. Then you have kind of hybrid stable coins. And I would say Tether is kind of a hybrid. They say they're fully backed, but they're not fully backed dollar to dollar. They have a little bit of other assets on their balance sheet as well. And then you have the algorithmic stable coins, which I would keep my hands off because most of them blow up. So you have three different kind of stable coins, but the ones which we use the most is USDC. Very easy to handle, and in my opinion, very highly regulated.
Is it correct to say that stablecoins are essentially blockchain technology on top of some other source of value? and that source of value could be, an algorithm, could be a cryptocurrency, could be another currency. But stablecoins are just using blockchain to facilitate trade in those underlying assets. In some sense, as almost like derivatives. Is that a fair assessment?
Ran, I think you use stablecoins the most.
Yeah, it is a cryptocurrency. Yeah, it's backed by different entities. Like Patrick said, USTC is something we use a lot. We settle directly with Circle, and it's very fast, very efficient, very cheap. So that's made settlements like very easy, and stable coins sit on top of different blockchains, public blockchains like Ethereum, which is the most common one, and so they're utilizing the public blockchain infrastructure to send and receive assets, and people use it, and it's worked pretty well. So then you don't have to, you mark things against the dollar, essentially against the stablecoin dollar, and then there's a very liquid market for these stable coins. So then you don't have an issue where you're sitting on a bag of like worthless fake dollar coins. So USTC is pretty good.
So let's move to some of the questions from the audience, because we are approaching the end of our webinar. So Martin says that privacy is key for success. He says of any digital currency, probably also any cryptocurrency. So what do you think about privacy? How that will get affected? How that will get reflected in the design of digital currencies or cryptocurrencies? So Bitcoin is supposed to be anonymous, but it's not as anonymous as many people tend to think. Is that correct?
I might do a little larger circle here. When cryptocurrency started, the regulator first thought I might need to ban or regulate the asset. And then they figured they cannot regulate Bitcoin because it's nowhere to regulate. It's completely decentralized. So what they did a few years ago, they started to regulate the players that move around either coins or the fiat. So the so-called VASPs, the virtual asset service providers, which is, for example, us. We are one of them. We are a regulated VASP. And now getting into your privacy argument, for example, Bitcoin, when a client opens an account with us and he wants to deliver Bitcoins, I need to do the KYC checks on him, and I need to do the AML checks on the coins. And as you said,
but KYC know your customer, because not all of our audience members will know these abbreviations. So KYC is know your customer.
Oh. Yeah. Excuse me. Yes. Know my customer. So it's like opening a bank account. And then if you open a bank account and you come with a sports bag of dollar bills, I want to know where they come from. So that's then anti-money laundering policy. And we do the same with Bitcoins. And there are tools, chain analytic tools, which the customer tells me a story, and I verify the story with the chain analytic tools. And if it matches, the compliance department says, fine, we take the coins. So going to your privacy argument, I am not allowed to trade privacy coins like Monero, for example, because my regulator tells me, well, you're not allowed to touch these things because you cannot do the anti-money laundering checks. So that's how it works. And I don't think cryptocurrency needs to be per se a complete private or privacy thing, because it will never work in the real world in mass adoption. But certain things, if I want to say send Ran a few Satoshis, no one needs to know, because it goes from my public key to his public key, and no one needs to know. Like if I give you $100 bill, no one needs to know. You still have that privacy though. But large transactions, as soon as you deal in financial with financial assets, you're in the regulated area, and there is no more privacy.
Also Neil is asking a related question. So which one is better for privacy, CBDC or crypto? Or cash or cash is king, right?
Crypto would generally have more privacy. Yeah.
Because CBDCs presumably can be programmed and seen by the central bank.
I mean, it depends how much you trust your government that he will give you some privacy on the CBDC concept. I mean, China was very open with their project and the way they designed the CBDC, and then there is some privacy, like lower cash transfers. They don't need to know. They don't want to know. But then same thing, right? If it goes above a certain hurdle, so if the amount reaches a certain limit, they want to know.
A layperson, I think, will have a very hard time understanding what a blockchain transaction is, and how. So, who monitors the monitor? Like, if the central bank says, or the government, the state says that we will protect your privacy, who will monitor the monitor? Who will make sure that what they say is actually true? Maybe they will have some, back switch there that they could, always. So is there a way, I mean, from a computer science perspective or from some sort of economic incentives perspective, to maintain the integrity of a digital currency and make sure that the central banks actually stand by their word as far as privacy is concerned?
We in Switzerland, we would have basically the citizen who can start an investigation if we feel betrayal, that we think that they use information behind our backs, then we could start an investigation, but that's all we can do. I don't think there is a potential technological solution to have an oversight fully automated where the central bank cannot circumvent it.
I think if the currency is a more issued by a central entity, like central bank, digital currencies, and even Tether or USTC, I don't think there's much real privacy. The privacy, I mean, essentially, I mean, Tether and USTC can freeze your coins, even if they're in your wallet. I mean, that's sort of embedded into the system, right? And at least USTC is regulated as such. And I would imagine it'd be the same with and even more apparent with central bank digital currencies.
So Gianluca is asking whether you think the World Bank and the IMF support the adoption of Bitcoins or other cryptos as legal tender. So he says that there is some news that the World Bank has threatened El Salvador with repercussions. So what do you think the international organizations are going to do? What role are they going to play in individual countries' adoption of cryptocurrencies?
Well, in my view, they made it quite clear. The BIS issued their guidelines, and the RWA cost for cryptocurrencies on your balance sheet is 1,250%. I think that says it all. They don't really want it right now. They want to slow the whole thing down quite significantly. So I don't see them being supportive to have Bitcoin as a legal tender for other countries.
And another question from David there, going back to CBDCs. Do you think that the introduction of CBDCs, let's say that they're still distributed through banks, so we do not disrupt the financial system as a whole, will help bank offer new services that they are currently unable to offer because of some fundamental flaws in the fiat currencies that exist today?
Maybe not in a very positive way, but it's all about efficiency and cost cutting for the government and as well for the citizen to have such an implementation of digital currencies. And for example, if let's say you have an open credit, you have a loan out and you're not able to pay it back, and then the system, like in Switzerland, you get basically charged with you need to pay back that loan, and your salary gets impounded, and you can only use so much of your salary that the loan gets paid back slowly but surely. And at the moment, that is a very cumbersome process with a lot of paperwork. A lot of different departments are involved to make sure that this is working. And I think with CBDC, you could kind of connect and link these things and could program it. But I mean, there is a danger, right? In Australia, for example, we have seen they dropped money as a CBDC to their citizens, but they basically told them where to use that money and for what to use the money and how quick you need to use it. So the money has a maturity date. So, I mean, think that forward. If you get a salary and the coins you get in your wallet needs to be spent in 30 days because the country wants you to spend money, the country tells you where to spend it. So you're not going to go on holidays. You're not going to go shopping somewhere else. And the scenario for me is quite dark. But I mean,
basically, if I understand you correctly, having direct access to the assets of the borrower, can do good things and bad things for the borrower. So we have no time left. So why don't we just spend 30 seconds? I'd like each one of you to give a 15-second final thought. What does the future hold for cryptos and CBDCs? Are they going to disrupt finance? Are they going to be a complement? Just one final thought.
I think CBDCs make things more efficient, which is a great next step. I think crypto is much more disruptive, especially in the newer applications like decentralized finance. And I think that people should look into cryptocurrencies and blockchain in general, and just to research and understand it.
I see a total mind change in that people need to take back the power and responsibility for their money, and the cryptocurrency universe or the decentralized finance universe will give them the power back. They just need to grab it.
Wishing you all a great rest of your day, and thank you very much for participating in today's webinar. Thanks a lot.
Thanks a lot, guys.
Thank you.
Bye, Ren. Bye, Viktar.
Bye.